Welcome back. We got some key macroeconomic data today, taking a look at the Fed's preferred inflation gauge, right? If you guys are watching core inflation, you need to look at this. You need to check this out. You need to pay attention here. What we got is look at this angle, right? This is the inflation's going higher. I don't know if inflation's really going higher. This is the Fed's preferred inflation gauge, core PCE, year over year. And we actually had the largest drop, right? We had the largest drop of the cycle, right? We're at 3.88%. If you look 1 month, right? The 1 month was actually pretty impressive, right? Of course, I want the inflation to go down here, but month over month, we got 0.1%, basically 1% month over month. That was better than expected. If you look at the 3 months, right? Look at the quarterly, 2.2%, 6 month, 3%, 12 month, 3.8%. We are making progress here on inflation. We got Josh Dobson, mortgage expert. What are your thoughts on that PC inflation, Josh?
Yeah, man. Honestly, it was what I was expecting. I really believed that we were going to see a good number on the PCE. So it was in line with what we were expecting. Obviously, it came in a little bit lower than the analyst predictions. But I think that's a true sign of what's going on with inflation for those of us, living in the real world, because it's what we're spending our money on. And we all know that prices aren't coming down, but we're starting to adjust. People are spending a little bit less, and that's what's really the driver for that number. So I think this is a good sign for the Fed and the future of rates, because I think as this continues to kind of decline, we could definitely see the Fed pull back. With that number, I really don't see them pushing towards a rate hike towards the end of the year now.
100%. I mean, uh, I think I think you're right. I mean, I'm 100. I didn't think they're gonna hike either. I thought these would come in better than expected. If they do, well, we got to hold more. We still have more data to come in, but this is definitely a lot of progress there. So Josh, you said that you think they would hike. You've changed your mind,
I
100%.
have, yeah.
Okay.
With this number, I mean, I believe that we would see a better PCE number, but a lot of the other data that we were seeing as far as PPI, CPI, those numbers were coming in a little bit hotter than anticipated. So I was kind of concerned. But I think with the $1 trillion in credit card debt, consumer spending starting to slow a lot more than what those numbers were showing us. And so I think this is more of a gauge of where inflation's headed, especially because, again, this is gauging what we're spending on, our personal consumption. So I think this is a good sign for what we need it to be for the Fed to maybe pause. And again, I still believe there's going to be a pivot next year. There has to be.
We're gonna get to those consumer spending numbers. Guys, highlight. You look at Josh. He was a little more hawkish. New data comes in, changes his mind. That's a smart investor. That is not stubborn. People, oh no, I'm not gonna change. It's gonna right. Be able to navigate the market. You got to take in the new data and alter your perception here. And based off this data, right, that we got today, we're gonna go over the rest of it. Oil, well, that has nothing to do with oil. Oil is pulling back. Yields pulled back. Dollar pulled back. Market up, right? So this was the shift that we were talking about. Can it carry over till next week? We'll see. But again, PC coming better than expected. The bond market is easing up a little bit. Right now, let's get through the rest of this core inflation. So we got a core PCE. Month over month, we already said it's a 1.1. It's at 0.1. Look, you can see looking at the past, this was a really good rating. If you look at it on a line chart, it is diving. It is diving. Come on, Fed, cut rates, whatever. Let's move over to United States PC index monthly change. Okay, we already looked at that. Um, Wait, no, yeah, we looked at that monthly change. We got the same thing, annual, whatever. This was the big one. Incomes, right? Personal incomes actually ticked up. That was very interesting. Just to give you a reference, you look at incomes and you look at personal spending. Personal spending was down. It's down versus the previous month, but personal spending came right in line, right? We said yesterday on Twitter, we talked about this. We want the numbers for the stock market anyway to come in as expected. Because if it's too high, well, the Fed might hike rates. If it's too low, oh my God, recession coming faster than expected. Market might. So we got that right in line, right? We got the expectation 0.4. but incomes did tick up. The market expected this, but I wanted to get Josh's take. Why do you think the incomes kind of ticked up? What are your thoughts on that?
Well, I think what you're seeing is a lot of the effect of some of these minimum wage changes, where, with the advent of some of these strikes, you're seeing some of that wage pressure. I mean, heck, we just had the new minimum wage law for fast food workers in California go up to $20 an hour. There's also talk policy wise, changing the 750 minimum wage for the federal and increasing that. So I really think you're going to see wages continue to tick up a little bit. I don't know if we're going to see wage pressured inflation because again, if we're not spending and we're not consuming as much, I still think a lot of the income pressure that we're going to see is just trying to catch up with where the prices are in the market, and it's not going to increase the people's spending.
Right, 100%. Good explanation there. Josh always got a solid, a solid explanation for what he sees there. So wage pressures possibly picking up a little bit, but not to the extreme that, oh my God, wage price spiral. We're not saying this is actually a good thing. I don't know if you agree with me, but I kind of do want to see wages stick up a little bit more with the core
Definitely.
falling. That's good for the
Yeah,
economy.
it
That's
is.
gonna keep us there. It's gonna keep us a little better. Now, getting back to the charts, right? Getting back to the charts. Oops, there we go. The market now is pricing in, FY, a better chance of the pause, right? It's now the probability rose versus yesterday versus the last month versus the last week. So good for the market. The market definitely did like that. Let's see what else we're missing. Oh, so I know, Josh, you're expecting that big collapse. I wanted to get your okay. So we got the savings rate, right? The savings rate did come down. My thing was on the savings rate is I wonder if, because I know it kind of feels like, okay, savings is going down. You hear people saying the savings rate is declining. Their savings are getting dried up, which is probably true to some extent. But could it be that people are investing their savings? I'm going to be the bad guy or the opposite cop here. Could it be that people are putting their money into money market funds?
Definitely. I mean, with the increase in some of the high yield savings accounts that are being put out there, I think a lot of people have, not necessarily invested in a mutual fund or a high yield savings account. I think they're moving their money where they're going to see a higher rate of return on a cash basis, and I think that's what you're seeing. But again, you got to remember, I think the statistic is 67% of Americans are living paycheck to paycheck right now.
Okay. So they're probably not the ones that are putting money in the money market funds. Okay, yeah, that makes sense. Also, next, and let's see if that kind of correlates with this. This is not 2008, right? We're not going to get that same collapse. We've talked about this last time. Josh told us, there's new rules in place and you're not giving out all these crazy mortgages. People are not selling because the rate's up. So you're not going to get that collapse. Household financial debt to disposable income is really at, what is this, decade lows. Like we're not really at risk of a big crisis,
Nope.
although I'm maybe a little more bullish on the economy than Josh is. But Josh, does this make a big difference for you seeing this disposable income to household? Do you think this is going to keep the consumer spending for longer? Or, I mean, I guess signal, does this mean the consumer is going to keep spending longer than expected, maybe into mid 2024? Or do you think, hey, this December, January, they're done?
Yeah, I still think that the holiday season is going to be a decent spending. It's going to be down compared to some of the previous years. But I don't really see this pushing out much longer because, I mean, like I said, you talk to the people on the street and you hear a lot of them and they're telling us that it's near impossible to not live paycheck to paycheck. You hear the stories about how we're going to see, a big portion of the U.S. Consumer not have any savings left after the next couple of months, and that's in line with seasonal spending. So I think with the inflation pressures that we've had over the last couple of years, it's been eating away at those incomes that have been pretty stagnant. This is something that I've been talking about probably for the last 3 years, and my fear, which is stagflation.
Stagflation, is that stagflation going to come from the inflation side, uh, higher oil prices, or just because we're already elevated?
I think what you're going to see is we're going to see continued elevated inflation. It's not going to come down as much as the Fed would like with what they've done, and they're going to have to pivot maybe driving inflation a little bit higher when they do pivot, and the economy stalling out. That's my take on it.
Okay. Yeah, a little bit of stagflation there, slowing down. How do we get around that? What is the positive take on that? So my take on it is now I'm thinking, you know who spoke today was Larry Fink. He was over in Germany. And hey, you got to listen when Larry Fink speaks, right?
You do.
He has the
It's a
insider.
lot of money right there.
He does not see a recession in the US till about 2025. He thinks it's going to get pushed out further and further. And I am kind of thinking, okay, how does that change? Does that change my view? He thinks it gets pushed out further and further because, like we said, fiscal policy coming in, manufacturing. So this kind of put things in frame, right? For me, maybe services. I do think after we talk, services do slow down, right? Do they contract negative, right? ISM services, do they contract negative? Maybe we're still okay here. We'll see how we'll keep track of that. Maybe that comes down for sure. Consumer retail, blah, right? We're at the end of the spending cycle after December. So I don't think we see services slow down till maybe January, February, March, somewhere around there. But at the same time, kind of this rolling recession, I think that manufacturing may be picking up because of this. And I know most of the economy is services and consumer spending, but here's the flip part of this. I want you to think about this. Fiscal policy comes in, more manufacturing jobs, more construction jobs, or maybe just a shift around. Employment never really falls off a cliff. As a matter of fact, maybe it rebounds a little bit. Maybe employment rebounds a little bit. People keep spending. You get a slowdown, maybe January, February, March, but then you get, it never really gets negative. GDP never goes negative because Inflation Reduction Act, CHIPS Act, all the manufacturing. He was naming a bunch of these things, and so I was just wondering, like, hey, what would you say against that? What would you say? It doesn't matter. Where is it that, hey, that fiscal spending isn't enough to keep GDP from going negative? Because you do stand on negative GDP, right, next year?
I do.
Okay.
Honestly, my take on it is there could be a shift in policy even more, right? We could see a little bit more populism, which would bring, a little bit more incentives for businesses to increase manufacturing here in the U.S. But my question for you is what do we do about the wages? Because we're already seeing a lot of the manufacturing and the workers demanding higher pay. And when workers are demanding higher pay and they can get cheap labor somewhere else, they may still push to keep that labor force exported, and not bring manufacturing back to the United States as much as we would like. But trust me, I would be all for policy shifting towards kind of bringing home the manufacturing here in the United States and focusing on building the infrastructure and the manufacturing here in the United States. My fear is the labor cost.
Right. Yeah, he actually did mention that too. He said the other issue we have is it's not that automation is going to come right in. It takes time. It takes time. And that kind of brings us to the UAW strikes. Are you tracking that as much? I know something just came out. UAW strikes. From what I'm seeing, they're getting worse. Or what are you seeing out there?
Yeah, I think it's expanding. I think they're getting more people involved in the strike. And you and I talked about it, right? I really think that this could be the beginning of the end for the big car manufacturers here in the U.S. They've already proven that they're a dinosaur and they're not able to adapt and change how they do things to fit kind of what's working. We talked about it. Elon Musk has been innovative as far as the manufacturing of the Tesla, bringing the prices down, bringing down the costs. So I think until the big boys can figure out, that they can't keep doing business the same, and make some major changes, this is going to be very hard on them.
It's interesting. I saw that. This dude was talking about it on CNBC. Investor, of course, he's bullish, and he said that they noticed as soon as the spread between I think it was Stellantis or Ford or somebody basically said, no, we're not going to pay that high wage. We're going to bring the spread down. The bond market bid up, or yields came down a little bit. So he's trying to make the correlation that, and this is more stock market-ish, that if they don't hike as much, obviously less wage inflation, that yields are responding to the UAW negotiation, which is crazy because it's like, hey, are yields responding to core? Are they PC? Are they responding to oil prices? They might be responding to everything, looking for an excuse. Would you agree?
I would
To
totally
go
agree with you on that one.
Agree, right? And we probably get everything at once, all of a sudden, bah, 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 right? So
Yep.
next, I know you understand this a lot better than I do. Where are we at with the government shutdown negotiations? Where are we at with that?
From what I understand, there's not any like headway getting towards that. They've made a couple of concessions and they've worked towards some of the spending bills, but the as far as a continuing resolution or an omnibus to solve all of it, they really have not come to any sort of agreement. And you still have the far right pushing to not kick the can down the road. But I did hear that there was some rumors that they were talking about possibly doing a continuing resolution, especially as both sides start to politicize this and polarize each other as far as the media and everybody in the United States who's to blame for it. But I think there's a lot of companies that are planning for it. I was actually going to be doing a video today for veterans, especially if they don't pass anything that can continue to pay our servicemen. There's Navy Federal Credit Union, and one of the other military credit unions is going to be rolling out a paycheck assistance program. So if you're banking with them, they will help you cover your mortgage payments, rent payments, car payments, and stuff like that.
Okay, so a lot of and see that's kind of my guess is that we do get more government just step in and try to ease things out, right? So you're gonna get that negativity because I'm always talking in terms of stock market, but how can they assist us, especially headed into maybe the most important election for a while? I mean,
Oh,
we're
definitely.
for a while, right? I mean,
Yeah.
you tell me, you're a veteran. When was what was the most important election for you next to this one in the past?
Um, I, I would probably say the Bush Gore election was a pretty big one. But I think this one's really important because of where the economy appears to be heading, the policies that have been in place for the last 3 years, what's that done, inflation. And I think you really have two camps on two polar opposite sides of the spectrum. And I think that's going to be a true telltale sign of what happens to the economy is going to be kind of gauged by what happens with this next election, and it's going to be huge.
100%. Love your input. I know Josh doesn't have too much time. Throw your questions out there for Josh. He's got to go back into a meeting. This is a working man. He don't play around. Um, hey Josh, what is anything changed in the mortgage market? Anything new? Any breaking news? Anything we need to hear about?
Not really. We did see some improvement in rates over the last couple of days, and a lot of that's centered around the PCE number and some of the other stuff coming out. As far as mortgages are concerned, there are going to be quite a few delays in getting your funding and getting some of the loans closed going forward if there's a government shutdown, especially if you're a veteran using some of the FHA programs. So, the government shutdown does not exclude mortgages, especially for those of you using USDA to buy a house. So the government shutdown is going to have an impact on housing as well.
100%. Hey, Yassine, I'll get to your question. We kind of talked about it about PC today. Do you think DXY will go up or down now after GDP and PC this week? We're gonna go like right now that we know the reaction is exactly what we expected, right? GDP comes in line, dollar eases, rates ease a little bit, not too crazy. PC comes in better than expected, a little lower. Dollar eases, rates ease. But I still think there's some more pressures out there that we can't confirm that it keeps going lower. So what I wanted to look at with Josh is taking a look at what we got next week because now the market's going to be looking forward to okay, we
Yep.
got that
Start
in.
pricing that in.
Let's price that in. Over the weekend we'll probably get the market digest all this data that just came in because there's still some more inputs. And then also looking forward, the UAW strikes could change, the government shutdown stuff could change also. But looking forward, let's see, Friday. Let's go to Monday. What is the most important data? And we're gonna shoot through this. No, not October 6th. Let's go Monday. All right. ISM PMI, Josh. Are you familiar with ISM data?
Yes.
Yeah, you are. Okay, good. Of course. I should have had the stupid button. I need my thing on here. Bro, I used to
Nah,
have
man.
it. I used
It's
to
all
have
good.
it.
That's awesome.
Usually I talk about ISM and it's like crickets, like, huh? So ISM turning up, Josh. I love to see this. To me, this is the business
Yeah,
cycle, probably the best of the business cycle in manufacturing. We
agreed.
came in, let's see, August 46.7. Consensus next week is 47.7. Do you think we keep climbing? Are we sideways? Do we get above, let me see, 46.7? Do we get to 48 or do you think we're still in the 47s? Where do you think we hit?
I think we stay in the 47s, and I think that's going to be a little bit in part due to some of the, what we're seeing as far as the UAW and some of the other manufacturing being affected by it. So I wouldn't be shocked if, this started to play out a little bit ahead of that.
Okay, great. Damn it. I want to be bullish. I'm like, nah, we're going to 48, bro. New orders. Let's go fiscal. Construction spending, Josh, we're at 0.7. Now, oh, you know what I heard was a lot of the, and let me know when you got to go. The construction spending was ramping up for
It was.
public infrastructure, but not private.
Yep.
Can you kind of give a more explanation? I heard, okay, well, public infrastructure. Oh, this is what Larry Fink was saying. There's more construction for public, whatever Inflation Reduction Act, FYI,
Yep.
versus private. Give us a little
Yeah.
take on that.
So yeah, I mean, what you're seeing is that on those, look at the construction spending in the residential market. Builders' confidence is way down. They're not buying. They're not purchasing more materials. You're going to see a huge slowdown in that respect. I do remember there was some talk that there was a lot of multifamily being built, which could help with the offset of the residential side of stuff. But again, most of what we're seeing is going to be coming from government spending
Right.
and trying to build some of the public infrastructure versus a lot of the private. Because I think what you're seeing, especially with the commercial real estate meltdown, a lot of those builders who were thinking about building multifamily, building some of the commercial spaces, they're going to start slowing that down quite a bit. And residential, with builder confidence being down as far as it is, you're not going to see them, doing much as far as materials either. So I think the big driver in that is going to be the public spending, but I don't know if that can be enough to keep that going positive.
To offset the downturn, right?
Yep.
All right. So construction expected to come in at expected to decline month over month. What are your thoughts? Above, below, right in line
I
next
would
week?
I, I would say they're pretty in line with that. Just because, like I said, you're seeing a huge drop off in the private sector, and albeit public is pushing it, we haven't seen a lot of that hit the market yet. But public will increase over the next several months to a year, which should turn that positive. But the private sector is screeching to a halt.
All right, we're gonna go a little nerdy here. ISM new orders. JP Morgan banker said if he had to look at one data point for the macro to understand the business cycle, it would be
New orders,
ISM new orders.
definitely.
This is a thing I'm looking at. I guess you're gonna say it goes sideways, right?
You know what? I wouldn't be shocked if we see this increase a little bit,
Okay.
just because, again, they're looking forward at this, and with kind of the advent of a political change or policy change, I think this becomes one of the things that you start to see some optimism.
Okay, yeah, I agree with you there. I think we're gonna move up here. The bad thing, obviously, we don't want to see ISM prices moving up because stagflationary a little bit, but maybe they move up together. We'll see how that plays out. Fed Chair Powell speaks. Blah blah blah. Who cares? Well, we got to pay attention to these guys. You know what's funny is we talked about the Fed kind of balancing things out. What did they do? They got hawkish last week. This week, the market goes down. Dovish, Brainerd. This was a great inflation. And then Goolsby
Yep.
yesterday. We can stop here. So the Fed, again, we kind of know the playbook. I don't think there's any big when we get a surprise, we're going to hear it. But so far, they're just balancing out the markets, trying to make sure that, there's assurance, I think, on that. Job openings, the market wants to see this or the Fed wants to see this continue to decline. I think we both agree this is going to decline.
Yeah, and I was going to touch on something real quick. You had mentioned it earlier
Hmm.
about the Fed and going hawkish to dovish. I know you were watching what Fed was saying at the town hall yesterday,
Right.
and you remember what he said. our job is to kind of influence the market and give them some, ideas of what we're doing. So obviously they're trying to manipulate the market a little bit, and I think that's why you saw the shift.
Right. And you know what? The question is manipulation, the word has a negative connotation. Is it always bad?
No, 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 no,
Not
no.
always.
I mean,
Not
their
always.
their job is to, like you said, stabilize prices and keep inflation down. So
Right.
if they can do that with what they say,
Hmm.
then they're doing their job.
It's like a little kid when he falls down, he's 3 years old on his knee, and he looks at you and you freak out. The kid freaks out. If you're like,
Starts
hey, you're
crying.
okay. You know what I'm saying? Starts crying. So
Yep.
it's that relationship, that hierarchy relationship, which is why I have a better respect for the Fed now. I used to just think the Fed is evil, the central banks are bad. But you know what? People, they just headlines. They don't even know what's going on there, right?
Yep.
Again, let me know when you got to dip out here. We got ISM services. This is probably the area. I don't know if you think it declines now. ISM services are I guess they don't give an expectation. We're like 50, 54 and a half, up or down next week.
I bet you 52.
52. Okay. Makes sense. I would agree with that. We see consumer spending slowing. Let's see, factory orders. Nah, I don't know. Anything in here you see interesting? Let me know. ISM prices probably. Who cares? New orders. I don't know. Whatever. I want to get. Where's the juicy stuff at? What else we got? Jobless claims. Do they start ticking up yet? Still sideways. I think we've been. I think we've been declining a little bit. Oh, that's a stupid chart. We've been kind of declining. Do you think we just bounce around here between 260, 200?
Definitely.
Yeah, I agree, kind of sideways. Meister, she's always kind of hawkish, but she has positivity. She has some positivity in there. Barkin, I'm trying to think, is he hawkish? Now they kind of have a name, hawkish this or
Yep.
dovish this. Yep, they're
Oh
all
yeah,
being
dude. We've named them all.
We've named them all. There we go. And then going into Friday, this is going to be the big. It's always Friday. The weekend digests. So for you
Yep.
market participants, the weekend is where the Fed starts to digest, or the market digests what just happened. Because day to day can be crazy. You can hear all these bullcrap articles and really good articles that get missed. So again, Fridays are important. First Friday of the month is always the employment report. We got non-farm payrolls. Man, we know these have been getting revised lower. What are your thoughts? Do we expect it at 163K? This one's been all over the place.
Yeah.
Neutral. Do you think we hit consensus? Up, down? Thoughts?
I bet you we end up hitting consensus, but we see revisions lower on the previous month.
What's new?
Yep. It's more
What's
of the same. I
what's new?
think a lot of that data is being manipulated for a reason.
Unemployment rate consensus 3.7. Consensus it ticks down. Thoughts?
Uh, I say it trades side or it goes sideways on this one.
Okay.
I haven't been hearing a lot about unemployment, people being laid off. There hasn't been a lot of media around it. I also in the day to day. I mean, there's been a couple people that I've talked to, and they said I know 3 people that just got laid off.
Mm-hmm.
But I think it's kind of just in line with what's been happening, so it's more of the norm.
Big one. Average hourly earnings. Up, down, sideways. 4.3 is consensus.
I'm gonna say up.
You're gonna say up. Because of UAW strikes, huh?
Yep.
Yep. And guys, that's a average hourly earn. I don't know, because what if a lot of people got laid off? I don't know. I don't know there, but it is definitely maybe some people have to work more. That's your wage, and that's one of the most key wage inflation indicators for you guys to pay attention to. The market reacts to this number a lot. So does the Fed.
Yep.
Point two. So that one might be kind of wild next week. Labor participation, it's been shooting up. You think it continues?
I totally think that it will.
Continues to shoot up. I think that's positive. Who knows about these payrolls? All these things keep getting revised. It's like, we'll see how that picks up. You know what else we had today that was pretty interesting that I did skip? The Michigan consumer sentiment. Okay, that is coming down, right? Probably because sentiment's down a little bit, conditions, financial conditions, whatever. But the inflation, where is it at? Where is it? Friday? Yeah. The inflation expectations next 5 years, pretty meaningful drop,
Yep.
2.8. Maybe I'm missing something. I was like, I thought gas prices would make this tick up or sideways. Any thoughts why the Michigan survey is down?
I think it has lot to do with what the Fed's already done, and
Okay.
what their expectations are for that and what it does. Again, the oil is a lot of policy.
Right.
and it fluctuates so much, right?
Right.
And there's spikes, and then it comes back down. I don't see us having the issues that we've had in the past with it, with embargoes and some of the shortages. So I think the price is just being controlled at the OPEC level, and I think they understand that they can only do so much before they cause problems in their own economy.
And I want,
And,
you know what I was
and,
gonna say is, go ahead.
and the other part about it is you got to remember they are spending a lot of money on infrastructure. They are trying to rebrand a lot of the countries within OPEC as places to visit and to come and vacation. So they're trying to maximize profits while also capping production. So I think that has a big play on why they're doing it. I don't necessarily think that they're pushing some sort of agenda. I think it comes down to they're just trying to bring in the revenue so that they can finish some of these large projects that they're putting in place.
It's always like we're just trying to make more money and increase our economy. Everybody thinks it's so
Yep.
personal, right? Everybody thinks it's so personal. If they do increase production, there has to be a reason that they get a better deal. I'm
Yep.
guessing for that to happen.
Yeah.
I was looking for the 1 year expectation because you're right about the 5 year. Duh, the rate hikes start to kick in. Maybe this is it. Inflation. Okay, there we go. This is the one I wanted to. I thought was a little more interesting, and maybe the market is saying that too. The 1 year, then in 1 year, they're expecting inflation to come down. I think that's very positive for the market.
Definitely.
Do you think this still has to do with policy, how it's making its way through?
Yep. I think a
Okay.
lot of this is all just kind of, riding the wave and trying to figure out um, how much or at least what the Fed's done so far and what it will do in the near to distant future. And I think that's, like I said previously, the spike that they put on interest rates was intentional, but it doesn't take effect immediately. It takes time, and I think that's what's coming.
All right, throw your questions out there if you have them before Josh has to go. What's his thoughts on recent bond crash on 30 year and how far it can go? The 30 year bond crash. Thoughts on it?
You know what? I think this is somewhat important. A lot of it is going to be centered around the concern with the U.S. and their ability to repay their debt. I think this crash is more of a correction. And you got to remember the Fed's keeping a close eye on this. They're not going to let it get too far away from them. They can implement some of their tools to offset some of this, but it's a decent number, and I think it's kind of what the market needed.
Come on, guys. Oversold. No, I'm just kidding. This thing can keep going. It sucks because a lot of people are buying bonds. And I was thinking about this yesterday. I was like, you hear bond inflows picking up while they just keep getting dumped and dumped and dumped. And then you
Yep.
question, wait a minute, is this ever going to recover? I mean, it will eventually, but it's going to be interesting to see how that comes in. Now, the other interesting part that I'll tell you guys is the issuance on the long side is slowing. So the treasury issuance, they're not dumping as much long-term bonds. So I mean, everybody's been saying this all year. I remember up here, I was like, yeah, it's going to bounce, and just fell through the roof. So we don't know, but I would say on my side, how far can it go? I think something needs to break. I think something really needs to break, or we get a really good inflation number. I don't even think RRP is really going after this at all. It's not a good enough. I mean, it's at 4.7. I don't think reverse repo is really buying this up. So I think you need that. You need some type of capitulation at this. The good news is on the short end, because I know why you're asking, Bukowski. You're long TMF, huh? The 3x leveraged long bond ETF. Probably long. He's like, damn, this thing is still falling. Everybody's buying TMF. Let me see what it looks like. Everybody's buying this TMF and it's getting smashed. Oh my
Yep.
goodness. It is getting smashed. Yeah, something's got to break. You're hoping something breaks and then that thing comes back up. I have no at this point it's all macro and policy. I don't think it's about technicals, I would say. It's all macro and policy. Bonds in general, the short end is kind of stuck. The short end is going to be okay cuz you do have this you do where is it at? Did I take it off here? No, I didn't. You do have this. Oh, I didn't see that today. It came off. You do have shadow QE still moving higher, although today it did pull back. So shadow QE supporting the market there. I've still got that on. Dimaj, do you think the U.S. government will have a shutdown? What do you think?
I'm going to give it about a 95% chance that they will shut down.
A 95?
Yeah.
Is this like does this mean, verse me on this? I haven't really looked at it. Is it that they can shut down? Isn't the shutdown like, okay, they can shut down for a couple days, but it won't be like a permanent shutdown? Is that kind of what it is?
Yeah, it's not going to be a permanent shutdown. So we've had these in the past.
Right.
Typically, they're days, sometimes they're weeks. You rarely get anything longer than a couple weeks. And the one thing that they're not telling you when they're talking about the government shutdown is they're passing bills to keep paying certain sectors. So even though you may see a complete government shutdown, there are still going to be people that are going to be receiving their paycheck stubs. It's just going to be some of the higher costs, more spending type sectors that aren't going to get paychecks, and they're going to see the problem with that. But the government shutdown is not going to last long. It's like I said when we talked last time. This is a lot of posturing and grandstanding. Really, the only reason it's going to a government shutdown is because of some of the politicians on the far right and pushing their agenda. And I think that's the only holdout. But eventually, they're going to capitulate because they're going to get too much pressure from their constituents. And the biggest factor on all of this is that it's too easy for them to do some sort of continuing resolution and just kick the can down the road. And I really think that's what's going to happen. They're
Yeah.
not going to be able to pass an omnibus bill and increase spending after everybody's been talking about how the government spending has been causing this inflation. So unless they can find a way to cut costs somewhere and throw out an omnibus that maybe looks a little bit nicer, it's just going to be a continuing resolution that eventually brings us back.
Omnibus bill, omnibus bill, really quick, because I know people are like, "What the hell is he talking about?" Real quick, you guys on TikTok, jump on the YouTube. We're live on the YouTube. That's where the visuals are at. If you want to see Josh, he looks good right now. Nice, shaved up and everything. Yeah, they're asking, "Where is he?" I don't see him. Tell them all the time. Omnibus bill. What the hell is that, Josh? I don't even know what that is.
So typically, what it means, it's a general term used for a huge government spending bill. So obviously, this is all over the budget. So in the past, an omnibus bill would be something where one of the parties comes out and says we're going to increase spending across the board in all these sectors. We may cut it, and it's called an omnibus bill because it's just a giant increase in government spending as far as the budget's concerned, and there's no change in or decrease to government spending at a real level. So the terms used to just describe a large spending budget bill.
So, basically, manipulate
More of
what
the
people
same.
think.
Yeah, more of the same.
Messing with people. Okay. Yeah, government shutdown, manipulate the market. Everyone thinks these things are to manipulate the market, Dimaj, and I feel you, but I think it's just there's so much complexity within government, fiscal, monetary that it feels manipulative, but it's really just emotions, people over exaggerating their selling or algos or buying. It's just a lot of exaggeration, and because there's so much uncertainty, it feels like there's manipulation. There probably is. Obviously, we know the banks, JP Morgan traders. You got freaking, what's his name? Jamie Dimon. Bitcoin, I will fire you if you guys trade Bitcoin, and then they're the biggest buyers of Bitcoin in some other country. So that's manipulation. This, it's like, come on, we know what's gonna happen. This is more of a political manipulation more than anything.
I
I
mean,
don't
if
think
you want to, if you want to look at it and see if it's some sort of market manipulation, look and see what the politicians are trading, because we can all see a lot of that now. If it's market manipulation, you'll see them investing. They'll be making some trades and purchasing some things, and that's a good indicator as to if we're going to see an omnibus bill or continuing resolution. If there's some big trades from some of the big politicians, it's a good indicator that an omnibus bill is coming because they know what's going to get some extra money from the federal government in the next bill or in the next budget.
um Okay, Bukowski, I'm glad you're out of that trade. Good job. Don't not holding it. You stopped out. It does look good. Even Meet Kevin is buying it. You familiar with Meet Kevin? He's a house hat guy. He's buying that TMT. You can see it on his face too. Every time it sinks, he's like, ah. But along with ENPH, great knowledge. Well done, Josh. He's thanking you for that. I was gonna say, as far as oil, let's talk oil geopolitical risk. How far do you think oil? I got this question this morning. How far do you think oil can go? My thing is maybe we get to 100, but there's not a whole lot of demand. Maybe there is because seasonality. How high do you think oil goes before it peaks
You
out?
know what? I could see $100 a barrel. I mean, that's definitely a legitimate number. Just to think about it in this respect, if we're going to be increasing the manufacturing here in the United States, we're going to have a larger demand for oil. Um, Albeit, I do agree with you. If we're talking about the consumer is going to be buying less gas, so a little bit less demand on the oil. But at the end of the day, I don't necessarily think it has anything to do with demand. This is all about supply and what OPEC's willing to do. And I think they've got a number in mind and they're going to manipulate the market how they want to. And I would not be shocked if we saw $100 a barrel.
Yeah, that's what I'm thinking too. And to the travel spend too for it's probably going to be a lot of travel spend. People socially, they're like, we got to meet our grandparents. A lot of people are yes people. They're not going to say no. Um, Everybody appreciates your info, Josh. Great professional response to everything. Now, here's the thing, Josh. I wanted to mention the U.S. production of oil up a lot. I'm playing devil's advocate here for the oil bulls. Okay. Hey, you know what? Maybe we make a deal with OPEC. Number two, Iran, increasing production. Iraq, Libya, Nigeria, Venezuelan. The fragile five is what they call them. Still increasing production. I believe the supply actually exceeded OPEC because like two of them don't have to actually follow the policy. I don't know how it works. And the
Right.
US is increasing. So maybe we don't get maybe we I still think we spike to 100, but maybe we spike to 100, all the traders cover, and then we come right back down. Great setup for the economy not to collapse. I don't know, we'll see, but that's what I'm thinking. Do you think those five countries plus the US could offset above $100 oil?
Um, No,
No, not enough.
I don't think there's enough, especially because if you look at OPEC and what they're doing, they could easily, shut off production and drive the oil prices to historic highs. So if they want something, they're going to get it.
They're like the Powell of energy, huh?
Yep.
Let's go, Elon. Where you at? Somebody needs to make a deal with these guys. I think that's what they want. What are they looking for, Josh? What do you
See,
think
but
they're looking for?
Elon's in Texas, bro.
Hey, did you see the governor from Dakota? He's hey, we can sell oil to everybody. You think Dakota could really support the global grid? I was like, bro, is
The
this
the problem with that, and I think that's the biggest farce in political talk, is yeah, we are sitting on some of the largest oil reserves, but the cost to get it out of the ground, process it, and then the quality. There's nothing that can compete with OPEC oil on that scale. And so you can talk a big game, but the problem with US oil is the cost to process it and turn it into the goods that we need it to be. And even if we were to, drill everything out of the ground, oil prices would still continue to be high. Again, because at the end of the day, the US doesn't want oil prices to drop to low levels, because once it drops too low, then oil companies have no incentive to drill anymore and they're just going to
right?
let it go back up. So there's a point where they're not going to drill anymore. And so to say that we could take over all the oil production for the US, it's just lip service.
Will we see a new frontier of oil exploration, or will we offset the energy demand with new green energy? I don't think that's where it's too right now. It takes too long. So maybe next year, maybe after the next election, maybe there's something in the pipeline, but we're stuck in this mess right now. Um, we're at the red light, like we're at the yellow light. We're starting to just there's no green light for that yet. We have too many issues. So yeah, in the future, 100%, that's the hope. But we did find out that hey, if you try to, you only have so much money. If you allocate so much money towards green energy, well, they're not incentivized to keep pumping, therefore prices go up.
Yep.
So OPEC does have us by the balls, it seems like. What else did we have here? Strongly believe oil will remain strong. Yeah, I was wrong about that. I thought oil was gonna poop out. I thought, hey, the transition for people are using Zoom maybe because I was owning the stock. I was like, hey, how bias is. I own it. This is gonna happen. Let's go. And
Right?
then you're like, damn, okay, maybe next year.
Wishful
Strongly
thinking, right?
wishful thinking. Yeah. So, but you got to be able to you got to be able to pivot. Yeah, you got to have a bias. You got to be able to pivot. Um, It'll take time with oil, just like the CHIPS Act infrastructure going into production 100%. And that's probably why Larry Fink is saying, hey, I think we're going to be higher for longer. So one thing he does say is he thinks the Fed keeps hiking till 6%. He thinks the Fed keeps doing these 25 basis points. He's that confident that the economy doesn't fall apart. Maybe so, maybe it is. And what I think happens here is we move to the efficiency trade where investors are like, okay, not everything's going to work. Rates are too high. We're going to invest in efficiency. Unfortunately, that destroys mortgage market. Correct? Am I wrong?
Yep.
Destroys the mortgage market. Real estate takes a back seat, and they're going to try to tokenize it. They're going to take advantage of it while it's down, and you're going to get the best companies who can still earn move higher. Now, before we move on to that, what else? What do you see? What do we had? Oh yeah, we read that. What is the
I was going to say
biggest?
something real quick
Go
though,
ahead. Yeah,
right?
go ahead.
So don't put all your eggs in basket on one basket when it comes to Larry Fink. Remember, he was a big loser in the 2008 housing market crash. So he hasn't been right all of the time. So I wouldn't count too much on what he's saying. Yeah, he's got a lot of money under his control, but he does not know everything.
Come on, Josh. He is BlackRock. Come on, bro. He knows everything.
Again, BlackRock, the leader of BlackRock was dead wrong in 2008, my friend.
He actually lost 100 million in like the 80s on a bond trade. He lost 100 million, and that's what changed his mind. So he does lose. Um, but he's not going to lose on CCIP chain link. No,
No, dude, I love that video. That was great. I mean, that makes 100% sense as far as everything moving over to blockchain and the interconnection in the global, you know.
that's probably what I'm most excited about. Obviously, when you put your risk in it, but I know it. I get it. I'm like, okay, I'm feeling it. I'm like, all right, we're at the top of the trend. Ease off a little bit. It's all about price. But they are implementing it, and we're gonna track. Me and my brother Isaiah. He's the one in the comments there. He's a computer engineer, so he can track the micro details of it. Where I'm like, huh? I just hear prices going higher. And he's like, no, let me break it down too. We don't know if that's true about this and that. So whatever. What do you think is the biggest geopolitical risk today facing I mean I guess the global
Well,
economy?
you can't even just say the U.S. anymore because
Can't.
once there's a war, it's a global war. Um, I I still think that there's a chance that China moves on Taiwan, and that becomes the biggest geopolitical because right now we can fight the proxy war in Ukraine and Russia
Hmm.
with money, but again, that may dry up with a change in the guard in 2024. So if that rides out through 2024, we may see us pull completely out of that. But I do think that China and Taiwan is the biggest geopolitical threat to the global economy.
And China's been doing this. I've been hearing about this. What do you call it? Soft versus hard tactics, right? They're doing a lot of soft tactics. What did they do recently? Let me know if you remember. They did something. They're banning. I don't know. You guys probably know. I have so much information. I can't remember everything. But they're doing a lot of soft tactics, and I was like, "What
Yeah.
the hell are they doing?" So somebody's trying to get a deal here. We should be seeing Janet Yellen traveling a lot. Hopefully she doesn't pull a Feinstein on us. But hey, I
Ooh,
know.
might be a little too early, bro.
Little early, yeah, they're up there.
Lady was
Everybody,
90 years old. Come on, man.
I know everybody has these conspiracies. Oh, did you see Feinstein? I'm like, bro, she was 90. She lived
Yeah.
a long life.
I
Like,
mean, she passed over, her all of her everything to her daughter because she couldn't operate anymore, man. I mean, the writing was on the wall with that one. I'm
right.
sure they had hospice up in there.
I know. Yeah, yeah. So, hey, shout out to Feinstein. She did a great job. I know people will hate both sides, but hey, that's a hard job. Most people they don't understand how stressful those are the most stressful jobs. You're gonna get
And she
hate
was a
for
lifer, bro.
choose a lifer. Yeah, 100%. You know better than I do. Josh, what innovations in housing are you most excited about?
Um, uh, blockchain as far as financing is concerned.
You hear that? Go
Um,
go buy CCIP. No, I'm just playing.
the other part about it is I think we see construction costs. The 3D printing
Hmm.
hasn't gotten a lot of the funding that it needs, but I think that's a good way forward as far as the construction costs for homes. And as they innovate there and they can build them a little bit faster, I think that's something that excites me about housing as well.
Here's your guys 3D printing, because at the end of the day, these guys want to know, well, what do I buy? Here's your 3D printing systems. Triple D, they got destroyed back to levels from 2011. I remember checking out this company. It looks like, yeah, they're just not getting the funding. They're down 95%. Go buy. No, I'm just playing. Don't go buy this. Then
No.
SSYS. You also have Stratasys. I don't know if you're familiar with Stratasys. Um, I only know them because Kathy Wood mentioned them before. They're down pretty well, but these are two 3D printing companies. I'm sure there's way more out there, but just to keep you guys that are listening, 3D printing is it's gonna be a thing. It's just these fiscal. I don't even know what the word is. The fiscal authorities suck. What are you guys doing?
Yeah, I
Um,
mean, at the end of the day, in order to change something, especially something that's been in our country for so long and that we've relied on and is as old as it is, you need some sort of incentive to get those builders to move towards something like this. So it's going to take some sort of government incentive. I mean, I was just talking to somebody the other day, and that's the one thing our government's really good at is incentivizing the innovation through incentives, whether it's fiscal policy or whatever. That's what's going to change any market, especially the housing market, because again, you've got a lot of old boys still doing the same old.
right.
But the big change is going to come through some sort of innovation, and that innovation, I think, is going to be 3D printing and blockchain when it comes to housing.
Do you think Gen Z will care about
No,
housing?
no. I mean, at the end of the day, we all need a roof over our head. I think you and I talked about it briefly. There's going to be a change in kind of how people achieve that. So again, whether it's converting large commercial office buildings into small residential units, 3D printing, multi-generational homes where more Gen Zers are living together just as friends. It's not as important. The American dream is kind of dying in that regards. So until we see home affordability come back to the U.S., there's going to be a lot less emphasis on owning a home with the younger generations.
You hear that? The American dream is dying. The new American dream is buy crypto. And that and that's gonna die out when they choose the damn Doge coins and the Shiba coins. That's gonna die out
Oh
real quick.
God, yeah.
That's insane.
I hope you didn't have any NFTs.
I talked to a guy today. His NFTs down 95%. I'm like, bro, how do you choose those? Like,
Well,
he said,
95% of them are bankrupt,
yeah, they're all
worth
yeah, they're
nothing.
that's a gamble. You want to talk about gambling, buying an NFT? You better
But that was
buy
the
a.
all the craze. I mean, even Gary Vee had his own line.
What happened to Gary Vee? Anybody know?
He's still around. He's still running
Well,
around talking about.
well, as far as NFTs, it's like you don't
Oh,
hear about it no more because
he's not pushing it because he
he's not
knows
pushing it.
it didn't do anything.
He didn't. Yeah, you're right. Yeah, NFTs, bro. I have look. I don't mess with NFTs. I know some people that do. It's too tough to understand. Like, what do you? It's like picking the right makeup. I have no clue. There was the ugliest. They had the ugliest NFT. Here's what I do know: the ugliest NFT. I don't remember what it's called. This dude from Switzerland was telling me. He said that thing exploded, so everybody's buying it because the attention. They're making fun of it, so it just kind of goes up. So
Yep.
whatever gets the most attention, but by the time you chase it, everybody else has. Be careful there. Hey, Evergrande is China, bro. Evergrande
Yeah.
is China. They collapsed a long time ago, and I
They've
don't
just
really
been being
understand.
propped up.
Still being propped up. China's gonna stimulate. They have no choice. Oh, that brings me to it. You know what
Too
Larry
big to
Fink says?
fail.
Larry Fink is the god of you got to believe everything he says. So here's what he said, okay? he said that it was interesting, and I don't know how true this is, that pre-COVID the Chinese people, the consumers, their savings rate was 35%. Now they're so afraid of something happening again post pandemic that the savings rate is up to 50%, and it's a reflection of fear. And so they can't invest in China because they will not spend because they don't have a healthcare system the way that we do. And I was like, damn, how does that? I mean, they're just not spending. It's weird. It's like that fear, right? I guess I get it, right? You don't have a backup plan. So they have the best savings rate. We have the opposite
Yeah.
problem,
Well, yeah. I mean, because they don't believe in their government. A lot of
right?
them have realized that this may not be all that it's been cracked up to be, and a lot of it was kind of just built on speculation. I mean, you want to talk about speculation? China's speculation in the housing market and just about everything that they did is falling apart because they don't have people buying it anymore. Nobody's wanting to buy real estate. And the other problem is you got to look at the demographics. They're a dying country as far as the
Right.
demographics are concerned. So you're gonna see what's going to happen with us and the baby boomers tenfold.
And who's doing let me see if you let me test you, Josh. See if you know what you're talking about. If you're all barking, no bite. Who's the fastest growing population?
Oh God, I don't even know.
Come on, man. I'm
I
just
haven't
playing.
even researched that. I just know what the dying ones are. China,
In
Russia, and the U.S. is pushing themselves towards that right now with the low birth rate.
with the movement to the soy boy movement. No, I'm just playing. Hey, hey,
You said
listen.
it. I didn't.
I said it. Yes, I said it. Stop eating soy. No, I'm just playing. There's a whole lot of things, but for the most part, there's some crazy stuff going on in. There we go, India. There's some crazy
India. I
stuff.
mean, that's
You
would
know,
have been my first guess.
the truth is the traditional countries that stick to traditional gender roles are growing.
Traditional values, and I mean that's. But again, you look at history, right? And a lot of the Roman Republic and the Greek downfall started with gender fluidity and the gender roles being confused, and you started seeing birth rates drop. So then you have less workforce, you have less economy, less GDP, more strain on the economy to support the older generations as they start to age. So yeah.
100%. I mean, we could talk about that all day. That's that stuff you got
Uh,
to be careful.
yep.
But for the most part, lift weights, make money,
Have
eat
kids,
healthy,
make
have
babies.
kids, make babies. Congratulations to my brother. I don't know if you want, yeah, he's having a baby. So right there, the guy that just said, okay,
Oh, congrats, man. Nice job,
yeah,
Isaiah.
I'm the oldest. I still haven't had a kid. You know how it is that you got that guy. He's just like, nah, I got to get my business together first. I'm
Come
not
on,
taking
bro.
that.
You got to have like three or four.
I will when I do. To me, that's a big risk
It
because
is. It's a lot of money.
once you go, that's it. So I want to make
Yep.
sure that I want to make sure Bitcoin and Ethereum go up enough.
Hey, man, I got to go. I got to make this
All right.
call.
All right. Hey, appreciate you, Josh. Shout out to you. Let me give you the shout
Do
out
you own
really.
crypto?
I do, yeah.
The blockchain will help you.
Okay, that was the wrong button. All right, there goes Josh. We will jump to the charts now. We'll jump to the charts. We'll go to the charts. We'll look at the stock market. Go follow Josh on YouTube if you guys don't mind. Give him a follow and shout him out. YouTube channel. He has a TikTok. I'll put all this stuff in the show notes. And let me know your guys' questions. We're gonna move over to stocks and crypto technicals, and then we'll do that. What do you think about the euro? I read something. Okay, so what do you seeing? What do you think about the euro? I read something about inflation coming down yesterday. It's easing. Inflation is easing overall. You get the oil spike, but we saw PCE come down. Inflation is coming down. It might be stickier in some segments, but consumers are weakening. It's all about government spending at this point. And for the most part, the cycle is turning. It's just taking longer than usual. Do you two actually watch or talk to Chinese people on TikTok? What kind of question is that? Is that a for real question? Or are you trolling? Talk to Chinese people on TikTok? No, I don't talk to Chinese people on TikTok. I don't know. I don't understand your question. Um, oh, you're saying Chinese have healthcare system like we do? Because it's a totally different type of nation. They don't have our type of help. They don't trust their government. There's a lot of people. They don't have the same supports in place that we do. So that is what it is. Now, let's move over to the macro forces. So go check out the macro forces. What is the market telling us right off the bat? Let's dive into it. So, okay, remember at the beginning of the week, we had GDP come in better than expected, right? Better than expected GDP. No, I'm sorry, not better than expected, right in line. Okay, the market wants to see GDP and all these expected numbers. The market does not want to be surprised to the upside or to the downside. The only time it's okay with the downside surprise is if it's about inflation. That's the good side. But for the rest of the stuff, the market wants to see it come in line, right? So taking a look over here at the yields, 2-year yields not moving. This means short-term rates, short-term funding is okay, right? It's not moving higher. Short-term funding is supportive to some degree. Why? Because of reverse repo, this money that's leaving the reverse repo that's coming from the Fed is buying up these treasuries. We're in good shape. Okay, so 2-year years, okay. 10-year still breaking out. That's the negative, right? We have this as a tightening mechanism. So you have one in the good basket, one in the negative. 10-year yields are -4. Same with the 30-year, basically long-term rates breaking out. Now, today, after that data came out, though, we did get a little bit of easing here. You see the red candle and the blue. Well, now it's starting to move up. So this might continue, right? This might continue, but there is a narrative that most companies, most mortgages, right? Most people that own a mortgage, they are already locked in at low rates. Therefore, these rates are not going to affect them. We're not going to get the real systemic collapse because nobody has to refi. Most people are already in low rates. When you think about equities, right, and companies, most companies have already locked in low rates. They're not variable rates the way it might be in Germany or Europe. So no systemic risk there, although the bond market does suck liquidity out. The higher the rates go, the less liquidity, so it's still a net negative. So we have one positive. Short rates are not moving, positive. Long rates are moving higher, negative. Okay, what about the dollar? Dollar. Oh, okay, the dollar eased a little bit today. So this is good, but it looks like it's now starting to bounce off that 106 level. Dollar's still a negative, right? So that's net tightening. So one positive, two negatives. Let's look at gold. Just kidding. Nobody cares about gold. Sorry. For you gold bugs, oil easing today, positive sign, but it's still elevated. It's still elevated. I would say that's 3 negatives and 1 positive. Oil, but if oil does break this trend and roll over, which I don't know if anybody believes that's going to happen anytime soon, still a net negative. Jumping over to the VIX. Oh, dang, the end of the day, the VIX jumped. So the VIX did come down. It looks like it's jumping a little bit. Let's say the VIX is in still good shape. So 2 positives, 3 negatives. The VIX is coming down a little bit. We still got 3 negatives. Bond volatility came down. That's a net positive, but it is up. Where do we put it? I would say let's put it in the negative camp. It's been moving up very strong. 4 negatives, 2 positive. It's been moving up. Plus, we know the more that those yields keep climbing on the long end, the more bond volatility. Just a little negative. Now we have here, I got to change the way this looks, is equity credit risk. Okay. Equity credit risks are still low. I don't think nobody's worried about this. Why? We just talked about it, because most equity credit is already locked in at low rates. Not a big deal, right? So 3 positives. No, I'm just kidding. 3 positives, 4 negatives. Put call ratio came down. It was elevated. I'd say I'd say it's a positive. It's not spiking. Maybe that was the end. You're still trending up in the short term, but it hasn't made a new high since what? March. I don't know where you put that. Maybe that's a negative. We're still up there, right? Maybe we need the trend to break. 5 negatives, 3 positives. Hopefully I didn't say that right or wrong. S&P. So for the most part, the macro forces are tightening the market. They don't look too great. Okay, but I'd say the good news is PCE's coming in lower than expected. Okay, PC core inflation's coming in better than expected. The market is anticipating more chances of a pause in November. We still have a whole month of data. So there's your positive so far. So far, the market is rigged against this. No, I'm just kidding. The market is trying to digest what's going on here. The UAW strikes don't look great. Okay, government shutdown. Yes, short term could happen, but it could get resolved. Those are things we cannot anticipate, which is a net negative because it's uncertainty. The market does not like uncertainty for the most part, right? So we're looking at that. On the positive side, we got some buying here, right? This is how many stocks are moving above the 50-day moving average. Finally bounced, made a new low, and it bounced. Therefore, the buyers are stepping in at this level. We are getting market breadth, not follow through, but at least show us this is where we want to start nibbling in. Okay, this is where we want to start nibbling in. You could say that NDX or the NASDAQ is starting to bounce right on this trend. We talked about that. So maybe we come back up here, retest the trend. We still need some look, the biggest catalyst going forward is earnings season. October, I think that's like October, the second week of October, we start to get the banks report. I think the regional banks suck. They're probably gonna have very bad news. And the big banks, the too big to fail banks, should be in good shape, right? They should be in pretty good shape. Taking a look at KRE, looks like trash. So probably those regional banks really fall apart there. Yeah, so that's what we got going on there. In crypto land, we have we got some buys on crypto. There's some catalyst here. They're not followed through 100%, but with SEC chairman got grilled. He doesn't want to say. I think they're buying crypto. My thing is, I think that the powers that be are buying a lot of Bitcoin right now, right? They're showing their hand. They cannot classify it as a commodity because if they do, then there would be no reason the SEC cannot file or allow the Bitcoin ETF. They'd have to pass them. Price goes higher. They don't want that to happen. They want to scoop up as much Bitcoin as possible before it starts to move higher. So, hey, get your Bitcoin if you're not already in it. CCIP, when it comes to Chainlink, they have a meeting next week. This thing is just surging, right? In the face of all this uncertainty from September, Chainlink is up 40%. Could it decline? Sure. But what does that tell you? That there is a catalyst here. There's a real catalyst. It is climbing versus the rest of crypto. Even if we jump against, we go to, Chainlink versus Bitcoin versus Ethereum, it is breaking out. Chainlink is breaking out against Bitcoin. It's not completely confirmed yet, but it is starting to press that level versus Ethereum, even stronger. Okay. So Chainlink is showing some, and this is, I think that to me, this is the third blue chip crypto. This is the third blue chip crypto. Why? Is it really a blue chip? Debatable. Tesla, was it a blue chip back when it was 40 billion? No, but it became a blue chip. Cathie Wood saw it as a blue chip because of the prospects going forward, because of what it could do, because of the backing, because of the narrative. So I think it's a blue chip. As far as the fundamentals, it's just going to come down to follow through with the with investment. Yassine, why is PC being better when it's lower than expected? Don't you want to see PC being positive, saying people are spending more? No. No, because personal consumption, PC is personal consumption. That is the Fed's inflation gauge. So right now, just so to make it clear, the market is juggling two risks. Yassine, two risks. If inflation goes up, that's a risk. Only because the Fed will have to accelerate their tightening and then cause a recession. The second one is a recession. Things fall apart. So you want to be in the middle. You want to have a cooling economy where growth doesn't collapse, but inflation doesn't go higher. That's what you want, Yassine. So right now, the market wants the data to come in as expected. When it comes to PCE core, what the market is looking at is if core inflation comes down, that keeps the Fed from tightening further. That's what they want to see, right? The Fed's preferred inflation gauge, target is 2%. So the more progress we get towards 2%, the more the market can say, oh, okay, we're getting closer to that target. Therefore, the Fed can ease or cut rates, or at least project rate cuts. Therefore, we can price in better expectations 12 months ahead. Therefore, we can look at if they cut rates, if yields come down, that means the cost of capital comes down. That means our valuations improve. So no, right now, PCE, you want it, core inflation, you want it to meet the target. The risk is obviously, because I get what you're saying, spending, right? Spending is coming down. That's okay. Because at any moment, the Fed can't control oil, but it can control demand. At any moment, the Fed can cut rates, and then boom, there goes the market higher because the Fed cut rates. Or the Fed could increase their balance sheet. They could start printing again. The market goes higher. So the bigger risk is that inflation goes higher because they'll have to tighten faster. The good thing is inflation comes down, therefore they can ease policy. Therefore they can create a tailwind for the market. Not that they're trying to do that. So for the most part, yeah, you want to see PCE come in lower than expected, but not dramatically, right? It just came in a little lower. That means inflation's down. Yassine, you want inflation down. The inflation rate is at 3.9%. The Fed wants it at 2%. The Fed wants it at 2%. So the faster we get to 2%, the better the outlook for the market. Hopefully that answers your question there. Right. So as inflation falls, you're also going to get the dollar also, capitulate to the downside. Now, going back to the market, let's see. You got GDP coming in. Consumer spending also came in pretty. Consumer spending came in as expected. That was perfect for the market. Consumer incomes came in higher, which could be a positive because if people are earning more but spending less, that's what you want. You want to see that. That's exactly what you want to see. What we're going to look at. Oh, I want to look at you Tesla bulls. Here we go. Looking at Tesla. All right. Tesla looks good. Tesla looks really good. Let's do some TA. Throw up the charts you guys want me to look at. We'll do some TA and finish off with that. I think we got through most of the macro. And also next week. So Tesla got back above the 241 level. Okay, this was 241. We're back above that level. Very positive. And we also got a gap up. So Tesla gaps up, right? We got this gap up last time. And we want to see the gap up that shows strength. That tells you there is buyers in there overnight, right? This is also with deliveries expected to be lower. This is a great setup for the bulls because deliveries expected to come in lower. If they meet expectations, great. It's already priced in. If they miss expectations, that'd be terrible because it's lower than expected. I doubt it because they're revising lower. If they beat expectations because the expectation's so low, this is going to be a catalyst for Tesla to go higher. So I'm watching this 250 level. That's exactly where we ended up today, right? I didn't want to get too excited because we had the numbers come in. And Tesla deliveries, I believe, come in on Monday. So Monday I'm going to see the reaction on Monday. But here's your price action, right? Higher, low. Tesla bottomed back in September, right? Higher, low, higher, low. Forming these patterns too. Higher, low. We're making higher lows. And I think today it filled the gap. That would have been an entry, but still I was like, let's see what happens on Monday for deliveries because you could get a big gap up or gap down. But it did make a higher low. It is trending up. So this is really good price action. Let's see, what are we missing here? Let's take a step back. I think we're still in trend. Oops. I think we're still in the trend for Tesla. Yeah, you're welcome, Yassine. That's what the market is concerned with right now. We're still in the uptrend. We're also forming a triangle. I think it looks better on this chart. And then shout out to Carbides. Peter, he showed me this indicator with volume. Shows that volume is picking up for the QQQ. Is this volume? Oh no, this is on the short term. Let's go to the long-term time frame. That doesn't look good. Let's go to Tesla. What are we looking like for Tesla? Here we go. So Tesla, hey, I want to see those. There we go. Tesla's starting to pick up in this triangle. This is your RSI, still uptrending. I like this. Maybe be patient here. Maybe be patient. Let's take these off and wait for the spigot. And I'm just kidding. For the spring, this is like a spring, right? What do springs look like? Springs have you have the spring and they start to tighten. This thing is tightening up in this wedge pattern. So we could see this, right? It starts to get tight. And guess what we have next couple of weeks? Earnings season. We have deliveries and we have earnings season. So eventually this thing's either going to break down or it's going to break up, but it's giving you a pattern. It's giving you an entry spot, or a place to at least think about how you might want to enter this trade if you're interested in trading. If you're just investing, you want some downside. You really do want some downside here because the UAW strikes, if anything, are going to push demand towards Tesla. There's a really good YouTube video today where, what's his name? The biggest Tesla bear has a $25 price target. He's ignoring all the other businesses. He's ignoring, FSD. He's ignoring everything. So who knows? You guys heard the story 1,000 times. Either way, Tesla's setting up pretty nicely here. Okay. Meta still forming. Look, this is the same pattern. Meta also still forming a nice wedge from the lows. Very nice dragon wedge. So look at it, right against the trend. Right against the trend. Really good price action there. Right against it's tightening up. It's starting to tighten. You may get some follow through here, but what's the signal really is the Q's breaking back out. Okay. So this is always your signal is you're watching the Q's form a, you want to see the Q's actually break out of this level. right? And the Qs are in a descending channel, a bullish descending. It kind of looks like a wedge actually. So you're watching the wedge there for the Qs. Hey, look, we don't have much people on TikTok. Jump over to the YouTube stream. I'm gonna turn you guys off. Jump over to the YouTube stream. Link in the bio. Appreciate you guys. All right, go to YouTube. All right. So this is what we got right now for the Qs, right? Let's see if I'm missing anything. Apple. Everybody wants to see Apple. Apple, very tight wedge. I think it's oversold. It is oversold. It is picking up, but this volume's still negative. You want to see that pick up. Let's see. We're still in a descending wedge. And this is very tight. So these are bullish though, coming from the lows. This is accumulation happening at the lows. Eventually we're going to, Apple will break out if the overall market can pick up. What's going to cause that? Maybe the ISM new orders picking up next week. Maybe the Fed. Well, you know what it's going to be? It's going to be government resolution as usual. It's going to be the UAW resolution. So those are big catalysts. The market's already down. I think the most of the pain trade is to the upside. And a big reason for that also is that the AI, the sentiment is very negative, right? People are very bearish right now. They're getting extremely fearful, which is always a good setup for some positive news. So that's my guess. I think we're going to see some positive news. Always a really good setup for that. Let's see what else we got. Apple, Google, also Amazon. Google Google's whatever. I don't think Google looks special at all. Amazon pulling back to levels from midsummer. It's probably gonna look pretty good. AMD though, this is probably the next trade. AMD very tight here. Okay, if there were to be a very nice trade setup, it is AMD, right? Gigantic. I mean, this is a big flag pattern, right? This is a huge flag pattern. What happened? Let's see. Is the buying stepping in? You want to see this? You want to see this CMF step up? I'm still trying to use this indicator. I don't think it's ready yet, but when you get these big flag patterns on AMD, let's see if we have it in the past here. Usually when you get these big flag patterns and you get AMD breakout, it's a pretty big trade. This takes us to all-time highs, probably above all-time highs. It is a chip maker. It's a semiconductor. Expect that stimulus in the fourth quarter. This doesn't, AMD doesn't care about consumer spend. That's why I'm bullish on it. It doesn't depend on, if you stop shopping at Walmart or you slow down, AMD doesn't care. AMD is receiving stimulus from the government for chips. That's what makes it so bullish. Okay, there's going to be demand here. So AMD, Nvidia, obviously the next chip maker. Nvidia looks weird. I never liked the price action in Nvidia, but it is breaking the trend here. Right, it did break that trend. Every single time Nvidia breaks that trend and moves higher, right? Here, breaks the downtrend, moves higher. Breaks the downtrend, moves higher. Breaks the downtrend, moves higher. What do we expect? It's breaking the downtrend, should be moving higher. Do you have any support here from the EMAs? Let's take a look. Nvidia, is there any support with those moving averages? I turned them off. Let's turn on the 50. Oh, it's still below the 100. Okay, so Nvidia is moving off the 100 daily moving average. Okay, let's see. Last time we were there, we launched off. So expect to go higher. No, I'm just kidding. It's not going to launch like that. But Nvidia has some support. We're getting some support for Nvidia. What do you have? Have you ever looked at the crypto coin named ZilQ? I don't know. What is the ticker? I don't think I would, because honestly, I don't trust any of those things. They're probably pump and dumps for the most part. That's my guess. A lot of pump and dumps there. So Nvidia doesn't look. Tell me what the ticker is though. Give me the ticker. We'll do some TA on it. Palantir has new contracts. That thing is launching off. Looks pretty good. Always bullish on Palantir. ARK. Hey, RKK. What is ARK doing? ARK is at the trend. Take a look at Zoom. See, did Netflix bounce yet? Netflix is due for a run up. They're very oversold, right into the 200 daily moving average. Netflix looks really good for a swing trade at these levels, right? It is Let's see, is it breaking the trend? Let's draw it from here. You got that reversal candle too. So nice reversal candle here. And plus it's oversold. So when this starts to pick up, should be a good trade. Oh, Zillow, would you say Zillow USD? Zillow USDT. Zilly. We'll take a look at it. What does it do? And why did you get into this? I mean, what got you interested in this? 28 cents, 1 cent. Bro, I know you're attracted to it because it's at 1 cent. That's what gets everybody in. Oh my goodness. Yeah. Is that what it is? Because it's at 1 cent? I don't know if my brother's on here. What the hell is this, Isaiah? Zillu USD? Psh. Let me know what it is, though. I don't know. Technically, like with crypto, you could have a good technical setup. Means nothing because these projects are very small. You want to know the tokenomics before you get into them. Boy, Open Door pulled back pretty hard. Zilka? Yeah, what is it? What the heck does that thing do? All right, cool. Isaiah will look at it, the fundamentals, to give you a little report on that. Open Door doesn't look bad. It's pulling into the 200. There's going to be some opportunity here. If the market can bounce, the SPYs, the Qs, there's going to be a lot of opportunity here for some of these names. You know who was interesting? Is it still short squeezing? Carvana. Dang, it's still holding in there. That's crazy. Carvana's still holding in there. People love it. ENPH. Wow, this is going to be a real spring to the upside. ENPH in phase. The RSI is climbing. I want to see what it looks like over here. Oh, still very negative volume. So nope, doesn't look great yet. RSI is climbing, and what up, Asan? How's it going? What are you looking at? How's your day going? You hitting that Planet Fitness today? Not looking at Coin, Adobe, PayPal. What does PayPal look like? Target. These things still falling apart. My brother's looking at it, Yassine. He's looking at the coin to see if it's just a trash coin. My guess is it is. A lot of people get sucked into it. Target trying to retrace beneath. Oh man, this might be a good short. If Target comes all the way back up to this previous resistance, right? Turns it in previous support, turns it into resistance. That might be a nice short there. Target. Shopify. Yes, Palantir had a nice move. Palantir has a lot going for it. I mean, it's one of those things. I don't really look at it too much. Um, I'd love to see it get destroyed, but I want to see it consolidate a little longer. But Palantir for sure. Zoom. Let me see where's Roku and Zoom at. Roku, man, Roku had this was nasty. This is some nasty price action right here. Eventually, it's gonna bounce. So look how oversold it is. Got a gap up today for Roku. This probably runs up. Where's Zoom? There it is. Oh shoot, Zoom moved up to 71 today. Okay, still wedging around there. Nice. Zoom is just getting tighter and tighter. It needs to get above 75 though. Waiting on Zil USD, whatever that is. So what are some of these catalysts in the market? What are the look at IWM just getting smashed. People are getting I don't know. We'll see how that plays out. There's a lot of uncertainty here. I think we need to get past the UAW strikes for sure. We need to get past those. So just taking a look at the overall market, right? Let's talk about that before we get that. Economic activity is switching places. What I mean by that is the ISM manufacturing is picking up. We'll get that reading next month, while services are set to slow a little bit. But I still think we're going to get a big fourth quarter run. The market is oversold. It's oversold. Rates should be peaking right now. The Fed is on pause. The Fed should pause in November. And liquidity is still bad, but we're set to pick up in liquidity. The technicals are great. Fundamentals are going to be key. The earnings season is big, right? Who can make money? The index might move sideways, but who can still retain their earnings? Who can park that cash in the money market funds, right? Money market funds doing 5.5%, 5% of interest. So the way companies navigate these waters are, let's say they pay 3% interest on their debt. Well, what do? They park cash in the money market funds. They collect 5%. They pay off their debts. They have extra liquidity. That's not every company. So big mega cap tech, I think, is set to move higher during this earnings season. That's my guess. Basically, from what I would be understanding now is that DXY should be going higher, and Fed is optimistic now, not having to hike rates. Let's say, well, the way I would look at it is the dollar is going to move higher if long rates continue higher. That's it. If the Fed gets more hawkish, meaning they lean towards hiking rates, that's where the dollar goes up. The dollar increases in value the higher the interest rate. Why? Because it's more valuable, right? You're incentivizing people to hold dollars because they can collect interest on their cash. So the opposite would be that they debase the currency, they cut rates. That's going to make the dollar go lower. Other than that, the dollar isn't really good. It's in risk off mode. If you're bullish on the stock market, if you're bullish on crypto, it's in risk off. Doesn't mean crypto can't move up. It just means it becomes a headwind. The dollar right now is a headwind towards risk assets. All right, here's the response. Another smart contract platform that runs mostly on Google Cloud, very centralized, not much activity. It's basically a more centralized Solana. So there's your explanation, Yasin. It's just like Solana. It's a copycat. You got a copycat coin there. Copycat coin. That's pretty much it, man. Copycat coin. I don't know how much you're down on it, but yeah, you're better off owning Solana, is what Isaiah said. You're better off owning Solana than that. It's 1 cent, so it sucks people in because it's so cheap and they think it's the next Dogecoin. But that's like seeing somebody won the lottery. So you go to you go to Circle K, you go to the little mini mart, the gas station, you start buying lottery tickets. Like, it's just not really. There's so many scams in crypto. Okay, so many scams in crypto. Do rates matter for stocks? Maybe some stocks. Yeah, that's what we're looking at here. The big risk to the market. The positive news is core inflation's coming down faster than expected. Maybe that gets the Fed. Maybe that gets the Fed to pause for sure. I'm optimistic. Oil might roll over. I think that's where we're at right now. You were wondering about Solana in 2020. Last 10 days was doing intense workouts. Hey, let your body rest. If you've been working hard, make sure you rest. You get some good sleep going into the weekend. I know people like to party, but it's going to take away from your ability to be more productive. Pick your spots. Make sure you get yourself a good diet, and let me see, Unlucky Man bought at 5 cents. Oh, that coin, you bought that coin at 5 cents? Yeah, well, hey, at least you now know you have somebody to actually refer to. You can always ask me. If I don't understand it, I'll ask my brother. So now we all go through buying crap and then it goes down on us. So I wouldn't expect it to go higher. Like it's 1 cent. It's like cutting a small pizza in 1,000 pieces. The whole pizza is still small. Yeah, right. Um, my Chainlink position is doing awesome. Yeah, we had that big surge in Chainlink like a couple months ago. Look, the news for Chainlink's only going to get better. It can keep consolidating, but the positive thing about Chainlink here, I try to tell people is you don't want to give financial advice, right? You're not supposed to give financial advice, but I will tell you this is probably the best opportunity I've ever seen in something that can scale very big, very largely in market cap that is being backed by I mean, World Economic Forum, Swift Network, right? Me and my brother are looking through some of these projections for price, not just price, but the revenues it could collect through the financial system. They look insane. We're talking revenues the size of Apple, Amazon, Google, not now, but in the future, right? But how accurate is it? We need more information. The point is, this is a really good opportunity here for Chainlink. Um, I mean, I'm not saying it's better than Bitcoin. It's not Bitcoin. It's like comparing Apple and Google to Tesla. They have different business models, right? Totally different business models, but it's more like getting Tesla when Tesla was, what is Tesla at? 400 290. It's like getting Tesla when Tesla was at 240. Tesla when it was at like $5, right? That's the difference here. It does a couple things really, really good. So Chainlink, very optimistic. We have some more conferences coming up, I believe this weekend. And hey, more and more banks are adopting CCIP in order to tokenize their assets, in order to transact on their private blockchains with other private blockchains, accelerating tokenization. And people hate central bank digital currencies, but central bank digital currencies need CCIP, right? What else do you want it? What else do you want? It's in your hands right there. It's not a guarantee, like I said, but the bigger the consolidation, the bigger the breakout. I bought ICP. Pull up the chart. Oh yeah, dude, this one is bad. Here's I got smoked. Look, I got smoked in crypto. I've lost so much in crypto. You don't want to know. That's why I don't mess with a bunch of crap coins. Is this internet computer? I don't mess with anything now. What is the damn ticker for? There it is. This is why I don't mess with coins anymore, bro. That just, oh, it might go higher, it has a good thesis. They will just keep dropping 90 to 99%. Like, it's not good. So I bought this. Look, this thing sold off. It came off at $641, bro. Internet computer, $641. The market cap was 90 billion. It is down 99.5%. Absolutely smoked here, right? I started buying. I was like, oh, great. This is a good deal. I bought it at, when it bounced here, at $30. Bought more at 20. I was like, oh, it's internet computer. If you know the narrative. And it just kept sinking. I finally sold all of it out, I think at like 20. I took a big loss. Thank goodness I didn't hold it. These coins can keep falling on you, bro. And this thing was 90 billion, right? You got to know the fundamentals. You got to know what they're doing. You got to understand and learn and educate yourself. Don't just buy this crap. Save yourself, man. Are you bullish on NFTs? NFTs, heard they're really cheap now. No, I'm not. I have a friend who is, but I don't invest in things I do not understand. I would not get into NFTs because there's too many NFTs. It's sort of like lottery tickets. You got to get lucky. You got to be very versed in the NFT marketplace to understand what's going to do well, what's not going to do well. You got to know people who can tell you that. So no, NFTs, hell no. Hell to the no. Not right now. That's a gamble for me. If you're in that niche, maybe it works for you. Not for me. Not interested. It's all art. It's not really based on fundamentals. It's just luck. It's just luck and skill. There's some skill to it, but I'm not interested. What do you think about Rune? What is this? Rune USD, Isaiah? What do you think about Rune? I think we talked about this before. I mean, the price action looks pretty bullish, so maybe it could be a nice trade here. Let's see, Rune. I mean, look at that wedge. It looks beautiful. The price action is beautiful. 79 cents. It's up $2. but I really doubt it's anything special. Maybe I'm wrong. Rune. Yeah, I don't know what Rune is. I mean, yeah, price looks good. Price action looks good. I mean, it looks like it's at least breaking out. Let's see what it looks on the weekly channel really quick. It is breaking out, like it's getting above a level. But why fish for these coins? Why fish for these coins when you got a guaranteed, I mean, the closest thing to a guarantee of a project that actually works. It's not like I benefit from you buying Chainlink, but I just don't want people to get screwed over. I've seen it so many times. What else did you have up there? Isaiah, the same people that recommended that once made big profits on Luna said to buy Rune after. Hell no. Yeah, there you go. Nah, bro. The, nah, Rune. I mean, I'll let him tell you, but I'm not giving financial advice. Stick with Bitcoin, stick with Ethereum. And I mean, there's some other stuff out there. Don't get me wrong, but start from there. Don't go chasing 100Xs, right? The best 100X that I could think over the next 10 years is CCIP if it continues to develop. How's oil doing? Oil's just chugging along. We went over oil earlier in the stream. You can always rewind it, but for the most part, bro, let's see. Oil is, oh no, not economics. Oil is pulling back a little bit. I mean, I don't know what happens here. It probably goes to 100. Okay, it looks like it's going to go to 100. That is a reversal candle on the weekly chart, but I want to see a daily reversal candle. Haven't got that yet. Oil looks like it's set to trend to 100. That's all I could say there. That's all I can say there. I don't see much else going on. All right, we're at 90 minutes. Throw in your questions, comments, concerns. I'm gonna close it out here. So what else you guys got? Throw it at me. Throw it at me. If not, then we'll see what we got this weekend. Hopefully we get UAW. Hopefully the UAW strike resolves itself. Hopefully, I would say we want to see government shutdown ending. Keep your eyes on that. The market's really gonna like that. Rune is a what is it? Thor chain token. Oh, Thor chain. Okay, Rune's a Thor chain token. I don't know what that is. Let me see. We're oversold. Hopefully rates ease. 10-year yields ease a little bit. I think the highlight of the week is definitely the PCE, core PCE inflation, the Fed's preferred inflation gauge down to 3.9%. On a month-over-month basis, 1%. Let's go. Let's go. That's got to change rate cuts and Fed policy to some degree. Hopefully that continues. And I think gasoline really just, oil prices really slow down the consumer and get down core even further. It does cross-chain, but very centralized. I prefer CCIP. Aave is better. Oh, so Rune is similar to Aave. Okay. There's your answers. Aave does cross-chain swaps using CCIP. See, and here's the thing. Almost all cryptos, right? They almost all use Chainlink as an oracle. It's the most, we got to do the data, like Isaiah, eventually the data, pulling up all the data, like the usage. We've looked at it before. It's only getting better. It is a monopoly in its space. Basically 99% of crypto is going to zero. People don't want to hear that, but it's true. People are also big on Cardano. Do you think that will ever get back up? It might, just because people believe in it, but Cardano, I mean, I'll let my brother tell you in simple terms. I've heard him say it 100 times. People want, like, Yahoo was pretty good, but Google overtook it. People are going to use one thing. They're not going to be using two things because it's fun. Ethereum is just a better network than Cardano. And it got the adoption. It's got the first mover advantage, right? I think everything in the top 10 will get back to where it was in the next bull. Today we had month-on-month consumer and year-over-year. What does have more impact? I I think it depends how you look at it. The month on month data, they call it coincident data, meaning you're looking like really close. You're not looking backwards, you're looking at the right now. So the month on month gives you the immediate information that tell the immediate information which kind of signals like what could be in the future. But the year on year data tells you the trend, it tells you the overall trend, so you can kind of see, all right, where are we really coming from? The month on month doesn't tell you where we're coming from. Which one's important? It depends what the market is concerned with. Okay, it depends on the market is concerned with. So if the market is looking for, let's put it this way, and it depends what indicator it is. If the market is concerned, if there's no inflation risk, right? If there's really not inflation risk, the market's going to be concerned with the year on year data. But if there's high inflation risk, it's going to be looking at the month on month and say, okay, this month on month is really going to tell us something. You want to put them all together. There is no one important indicator when it comes to that. What you can do is look at the month on month and you annualize it, which means if this month we're at 1% and you times it by 12, you're going to get 1.8% inflation, something like that, right? 12 months. So that tells the month on month tells you if this continues, inflation is taken care of. If you go to the 3 month, the last 3 months of inflation, that tells you inflation is going to be at 2.2%. You go to 6 months, it's going to be at 3%. You go 12 months, which is the year on year, 3.9%. So what it tells you is the further you look back, the further you see the trend is coming down, right? That's what that tells you. Is one more important than the other? Wait, what did you mean by consumant? Did you mean consumer? CPI? Now I'm kind of confused. There's no year on year consumer spending. It's just month over month consumer spending. But if you're talking about consumer spending, there's only a month on month. And I think spending is more important than the income right now. The spending numbers more important than the income. I highlighted that in the Twitter yesterday. Can you check Rivian? Oh, Rivian looks solid. Okay. Rivian looks solid. I mean, there's going to be a comeback in EVs because all the incentives. I'll tell you this. I like Rivian better than Neo. I know that's been breaking out, but look at this. Right into the 100 daily moving average. That is let's see what the 50 looks like. That is a golden cross. Got a golden cross there. Just throw on the 50. It's getting above the 50. Rivian looks solid, bro. I mean, shoot, starts breaking over 24.50. Looks like a breakout to me. I like that. Am I interested? No, but Rivian, yeah. RSI starting to move up. Good. Still holding ETH. Yeah, ETH, just hold it. Just be patient. Can't lose with that. Only a couple will get past all-time high. Yeah, a lot of cryptos pump, and they never get back to the all-time high. I think Chainlink will double its all-time high. Yeah, me too. I think Chainlink, I say it runs anywhere between, I mean, let's say we have bad macro for the next 12 months. Chainlink probably goes to all-time highs, 55. If the macro is good, I think Chainlink can run to 150. I think it can run up a lot, especially, and that doesn't mean it sticks at 150. I'm just saying I think it can touch 150, probably stabilizes around all-time highs after that. But you want to catch 80% of the move, right? You want to catch the big move. That would be insane, but nice though, since I'm still holding Chainlink. Yeah. Chainlink is legit. I mean, on semiconductors, go on. Let's see, on still trending up again. I think on, hey, there's a lot of infrastructure spending going into semiconductors. Semiconductors are not going to suffer from consumer spend slow. These are very bullish. I still like AMD better, especially with the setup, but AMD is wild. Oh, that's not AMD. AMD is wild though. It's pretty wild. So it just depends. But on 100%, bro. It's these guys are receiving stimulus. Look at the trend. Very consistent. Also, Tom Lee is bullish on this stock also. So it's solid. Still holding the averages, still above the 200, trying to get above that 100 daily moving average. I'd say the breakout is above 96, about 96. And when I say breakout, it doesn't mean go buy the breakout. It just means once it gets above 96, you're now flipping bullish and you're now looking for the support or confirmation or something. It's probably the Qs or SMH, right? SMH, the semiconductor. If you're looking at any semis, you want to see SMH. It did break the downtrend. It looks kind of nasty, but you want to see SMH start to recover here. This is the ETF. So you want to see the ETF recover in order to have your confirmation that, okay, if the ETF recovers, they're all going to recover. We could just take this off. It didn't meet expectations. So that's what you're looking at here for SMH versus those other semis. Revised up consumer sentiment. Oh, consumer sentiment got revised up. I don't know about that. Maybe they did. I don't know. I know jobs are getting revised down. Hey, check. Yeah. Oh wait, I made a mistake. My bad. Yeah, check your spelling before you send the message. I do it too. I get in a hurry. Just good practices. Read what you write before you send it. Rivian has a contract with Amazon to make 700,000 Amazon delivery truck. Yeah, now this might be bullish for Rivian because Amazon is going nowhere. They're going to try to compete in the electric vehicle space. And I've heard Ross Gerber said that he's also bullish on Rivian. So that's very interesting. 20% of Rivian is owned by Amazon. Yeah, Rivian's probably in good shape. It's probably a good bet there. It's probably a good bet with these EV credits coming online. How big is, I wonder how big the market cap is. So in the short term, yeah, I like Rivian. It looks bullish. It is crossing everything. All right. Well, I got to get going. It was nice to hear from you guys today. Hopefully you guys enjoyed the podcast. I'm just kidding. Enjoyed the stream. I'm losing my voice now. I'm dehydrated. I need to go eat something. I need to go to the gym. Hey, I appreciate you guys jumping on. Shout out to all of you guys who jumped on, who stay consistent. Let's get through this market together. Make sure you work out. Keep a growth mindset. Learn something new today. Stay optimistic. Don't let nobody drag you down. Say no if you have to in your life. Say no. Eat healthy. Don't eat McDonald's. Lift weights. Okay, lift weights. Take care of yourself. Stretch. Market cap 23 billion. And yeah, you guys already know, stay blessed. Christ is king. Stay blessed. I'll catch you guys probably tomorrow. I might be changing things up, but I'll probably do a report tomorrow. I just have some other stuff going on and, we'll see how it turns out. Either way, you guys will know. All right. Stay blessed. I appreciate you guys.